Hi, Andrew Bell here with you, and I've got quite a number of other relevant bits of information that may help you get even more insights into our real estate market at present and all its complexities. First up is there's further news on interest rates, which are of course on hold for the third consecutive month. The general consensus is that much of the negative economic news that's floating around about a slowing economy, and with the latest inflation figures trending down, that perhaps we are indeed at the top of the interest rate cycle. No need for further increases. The speculation on the downward movement of interest rates varies between the banks and their own internal research departments and their own economists. And there's quite a big difference about when we'll see reduction in rates. Some are forecasting as early as late this year, and others are suggesting there'll be no reduction until the end of next year. So the jury's out, but the consensus is that we are at the peak. Now, we know that spring is a very busy selling period for real estate, but the general belief that interest rates have peaked appear to have triggered a larger than usual buying drive for spring. There is still evidence of some FOMO, and that is understandable in many markets where stock levels continue to be very, very low and buyer demand's high. Now, the most visual indicator of the market activity are auctions that are by now, and by a country mile, the most preferred method of sale for most sellers in the country. Ray White is the leading auction company in the country, so we've got great stats. Last weekend, there were 393 auctions recorded with an auction clearance rate under the hammer of 74%. After sales that occurred straight after the auction, that's up now at the 90% plus bracket. Interestingly, Sydney's clearance rate was the strongest in the country, with 82% under the hammer on auction day. On average, every auction around the country averaged 4.1 bidders, which is really only slightly down on the same volume and success rate as about this time last year. Our monthly in-room auctions here at Ray White Surfers Paradise, just passed on the 7th of September, saw a bumper crowd with the most active bidding that we've seen this year. In fact, there was an average of 7.1 bidders at our auction. Spring is always such a busy time, and I should note here for those looking to buy, we have some 40 auctions on the 28th of September. A great cross-section of Gold Coast properties, which are highlighted in this market update. Now, what is becoming incredibly evident is that markets throughout the country are vastly different. When we talk about a national average, it does not reflect that some markets are incredibly strong and other markets in Australia become very weak. But even within areas such as the Gold Coast, some price brackets are really strong in sales activity, and others have slowed substantially. That there's quite a difference in sales activities, listing numbers and buyer demand in one suburb compared to another, and the same in different price brackets. It's absolutely all over the shop and makes it very difficult for sellers to really understand factors affecting their property, and for buyers to understand why it's hot in some areas of the Gold Coast and not in others. But I'll give you some indication about the sorts of underlying factors that do influence the substantial differences in the marketplace. For example, migration from capital cities into regional areas as a result of the pandemic has slowed substantially in most areas throughout Australia, reducing the number of buyers in the marketplace and the wealth trickle-down effect where people are selling their properties in high-priced areas and cities like Sydney and Melbourne, and then are strongly cashed up to buy in the regional areas and are able to pay higher prices than local market would normally pay. Now, I've got to say, that's everywhere pretty much, except, and I repeat, except areas such as Southeast Queensland, which continues to see healthy migration levels at present. What may change is if prices fall in the markets they're coming from, giving them less money to spend when they arrive here on the Gold Coast. Now, another example of underlying factors is that building costs on the Gold Coast are now the dearest in the country. They went up 10.5% over the past year and are forecast to stay at that sort of increase annually for at least 4 years. A lot of factors in that, and not enough time to explain them all today. But as a result, an increasing number of developers and builders have simply scrapped plans to build on the Gold Coast. And so we are still faced with strong migration numbers and an ever increasing population base, yet a shortage of new properties entering the marketplace. The last bit for today is that nationally there was strong growth in new listings coming to the market throughout Australia. In August, there was a 9.4% increase. No surprise, as this time of year, it's quite normal for more stock to hit the market for spring. But that is quite a substantial jump and will provide buyers throughout the country with more selection. But only time will tell us whether that tempers sales activity and sale prices. So there you have it, with just some of the factors that make reading the market going forward somewhat confusing, and why there is such variance in opinions about the journey ahead. What many are expecting is that there will be a lot more listings coming to the market because of the impact of high interest rates and the pressure that they have put on so many mortgage holders throughout the country. No question, high interest rates have reduced the borrowing capacity of all buyers, so potentially that will keep a brake on price growth moving forward. But again, as mentioned above, it just varies so much from one area to another. When you see that in many parts of the Gold Coast, up to a quarter of all the sales are to buyers with no mortgage, that certainly puts a great flaw in the real estate market here on the coast. Well, I'll be back with you in a fortnight's time with more news on the Gold Coast property market.